Today, we're slicing into the latest financial report from the conveyor belt sushi giant Kura Sushi. And their 2025 results tell this really fascinating story. It's a story of global ambition, a huge turnaround in America, but also some serious pressure back home in Japan. All right, let's get into it.
So here's how we're going to break it all down. First, we'll look at the big picture, the company's overall performance. Then we're going to zoom right into the three key regions, Japan, North America, and Asia. And to wrap it up, we'll see what the company is actually forecasting for the year ahead.
Okay, let's kick things off with that big picture view. These are the consolidated results for the entire company. It really gives us that 30,000-foot view of how Kura Sushi did globally this past fiscal year, before we drill down into what's happening on the ground.
So, looking at the top line, the company pulled in a really impressive 245.1 billion yen in total sales. Just to give you a sense of scale, that's well over 1.6 billion US dollars. That is a truly massive amount of sushi being served around the world.
And that number represents a very healthy 4.3% increase from the year before. It just goes to show you that the global appetite for their unique dining experience is definitely still growing.
But here's the real headline number, right? The final bottom line net profit. It jumped by nearly 12%. So even with some challenges, and trust me, we'll get to those, the company as a whole became way more profitable. But this big number kind of hides some very, very different stories when we look at each region.
And that brings us to our first regional story, starting with Japan. Now, this is Kura's home turf. It's their biggest market by far, but as you're about to see, it's also where they are feeling the most heat.
Okay, so check out this contrast. It's really interesting. You can see sales in Japan did grow a little bit, which is great, but look at the recurring profit. It dropped from 6.5 billion yen down to just 5 billion. That's a fall of more than 23%. So what in the world is going on here?
Well, it really boils down to a few key things. First, like a lot of restaurants, Kura is getting hit with rising costs for ingredients and labor. At the same time, they were making some big strategic investments, renovating stores and launching a whole new premium brand in Tokyo. And yeah, those huge anime collaborations with Demon Slayer and BT21 were incredibly popular, but campaigns like that are also really expensive to pull off. So the takeaway is clear. Even though more people were coming in, rising costs and big investments just ate away at the profits in their home market.
But while Japan was facing some serious headwinds, the story in North America could not be more different. Honestly, this is the highlight of the entire report. We're talking about a massive, absolutely impressive turnaround.
I mean, just look at these numbers. Sales shot up by over 17%. But the truly amazing figure is the recurring profit. In 2024, the U.S. subsidiary posted a loss of over 1 billion yen. 1 billion! But in 2025, they swung all the way around to a profit of 114 million yen. That is just a dramatic reversal of fortune.
And this chart just says it all, doesn't it? Going from over 1 billion in the red to solidly in the black, all in a single year. That's a huge achievement, and it was a major reason the company's overall results looked so good.
So how did they do it? How did they pull this off? It was really a mix of aggressive growth and just smart management. They opened a record 15 new stores in the US. That Demon Slayer collaboration turned out to be a massive hit with American audiences, driving tons of traffic. And crucially, while they were expanding like crazy, they also kept a really tight lid on their costs. All of that worked together to flip the switch from loss to profit.
All right, now for our third region, Asia. For Kura, this pretty much means their operations in Taiwan. And the story here isn't one of these dramatic turnarounds, but one of strong, consistent, and, really reliable growth. And the numbers totally back this up. You see both sales and profits are up. Sales grew by a solid 5.9%. But what's even more impressive is that recurring profit jumped by over 26%, crossing that 1 billion yen mark. It really shows that the Taiwan market is a dependable engine for the whole company. Their success in Asia is built on a playbook that's pretty similar to their other regions, but with a local twist. They ran these super popular collaborations with characters like Chikikawa and Peanuts that really connected with the local market. They backed that up with seasonal promotions and just a steady pace of opening new stores. Smart stuff. Okay, so that's the story of 2025, right? A squeeze in Japan, a huge boom in America, and steady, solid growth in Asia.
But what does Kura actually expect for the next fiscal year for 2026? Let's take a look at their official forecast.
Now, real quick, before we see the forecast, a little clarification. The report talks about two kinds of profit. Recurring profit is what they make from the core day-to-day restaurant business. Net profit is the final number, the bottom line, after everything. One-off expenses, taxes, the whole shebang. The forecast gives us numbers for growth. And this is where things get a bit cautious. Kura expects sales to keep growing, which is good, by almost 5%. But, and this is a big but, they are forecasting a pretty significant drop in profits. Both recurring and net profit are expected to fall by about 16 to 17%. This really suggests that they think those cost pressures we saw in Japan might stick around, or maybe even get worse.
And, of course, the company includes the standard disclaimer here. This is their best guess based on what they know right now. But as we've already seen, things can change, and they can change fast, especially in the restaurant business. So, what does this all boil down to? It brings us to this final question. The 2025 results show a super clear pattern. Kura's international business, especially in North America, is absolutely firing on all cylinders. But the challenges in its massive home market are weighing down profits, and the company's own forecast is pretty cautious. So the big question is, can this incredible global growth keep accelerating and ultimately be enough to offset the squeeze back home? It's a high-stakes balancing act, and one we'll definitely be watching very closely next year.